Good evening, everyone. Welcome to the channel. Today I am going to talk about Cowell interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Cowell eHoldings Inc. offers a diverse range of businesses and services, including design, development, manufacture, and sale of modules and system integration products for smartphones, multimedia tablets, and other mobile devices, design, development, manufacture, and sale of optical components used in consumer electronics products, provision of camera modules to mobile device manufacturers, supply of optical components to subsidiaries or affiliates of electronics companies, trading of camera module and optical products, technical consultancy services. Cowell eHoldings Inc.'s stock skyrockets. A combination of financial strength and industry influence in the past year, Cowell eHoldings Inc., HKG 1415, has seen its stock price surge by a remarkable 76.88%. This significant increase can be attributed to a combination of factors. Firstly, the company's robust financial health and growth have been impressive, with a return on equity (ROE) of 29% and net income growth of 23% over the past 5 years. Additionally, Cowell eHoldings has consistently delivered positive earnings reports, exceeding forecasts in its latest releases. The company's optimistic outlook for new products, as expressed in its annual results announcement, has also contributed to investor confidence. Furthermore, being identified as an Apple concept stock has provided a boost to the company's shares, as seen during the upward movement alongside other Apple-associated companies. This suggests that positive sentiment within the technology sector, and specifically regarding Apple, can have a significant impact on Cowell eHoldings stock performance. The primary drivers of revenue growth are multifaceted. Key contributors include increased orders, technological innovation, and expansion into emerging markets such as the PRC, India, and Vietnam. Strategic synergies with partners also play a significant role in driving revenue growth. Additionally, sales to intermediate holding companies have seen a notable increase of 58%. Seasonality of operations, particularly higher sales in the fourth quarter due to holiday season demand, is another factor contributing to revenue growth. The company is indeed generating positive operating cash flow. This is evident from multiple sources within the financial summary. Firstly, page 28 indicates a net cash generated of $186,130 and a cash generated from operations of $210,027, both of which are positive figures. Furthermore, page 35 explicitly confirms that the operating cash flow status is positive. These indicators collectively demonstrate that the company's operating activities are producing a surplus of cash, rather than depleting its resources. The company's debt level has undergone significant changes. While total debt has increased from $831.9 million to $911.5 million, the gearing ratio has decreased, indicating a relative decrease in debt compared to equity. However, interest expenses are not directly comparable due to differences in lease rentals paid. There were no notable acquisitions or divestitures in the company's financial activities. The absence of such transactions suggests a stable and focused approach to business operations, allowing the company to maintain its core strengths without significant changes to its asset base. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights several red flags that suggest potential issues with inventory buildup and supply chain disruption. Uncertainties in tariffs and trade policies are putting pressure on supply chains, as mentioned on page 6. Furthermore, the significant increase in cost of sales and decrease in gross profit margin on page 22 indicate a possible buildup of inventory or disruptions in the supply chain. Additionally, an analysis of page 37 reveals that the company has increased its purchase of raw materials from related companies, which may be a sign of potential supply chain disruption or inventory buildup concerns. These findings collectively suggest that the company should investigate and address these issues to prevent further complications. That concludes the financial summary for Cowell. Feel free to comment below, and I will be happy to answer them when possible.